Hey there, great people. Thanks so much for dialing in. Touching base to let you know that as with all of our content, this is general in nature. It does not take into account your specific or personal circumstances nor your individual risk profile, and as such should not be acted on accordingly. If you get value from this and you want to explore some things further, I strongly recommend that you get personal advice from a qualified professional.
All right. Hello all and welcome back for another session. We're in the middle of a cost of living crunch. We're getting hit at the bowels of the grocery store, and certainly from an insurance perspective, and in particular around private health insurance. So I wanted to do a session on private health and all the ins and outs and try to demystify this area, because I certainly know it's a bit of a black box for me in terms of policies and features and the tax system around it. So we're very lucky to have Tyler Blackburn from Finder with us today. So thanks, Taylor, for dialing in. Taylor's a bit of a, Finder actually, you guys do a lot of comparisons around bank accounts, credit cards, and even luckily for us, the health insurance system. And Taylor, you got a lot of experience. I've seen you on different platforms, Sunrise, the Today Show, and Studio 10. So thanks again for dialing in, and great to have you here.
Yeah, thanks for having me.
Very good, very good. Now, Taylor, I've been stalking a bit of your content of late, and I've noticed that, you're really good at sort of explaining sort of complex topics nice and simply. So have you always had like a bit of a penchant for personal finance and these types of things?
Yeah, I think so. So, my background coming out of school was in education. So I had studied to be a world history teacher, and but actually my first job out of school was I worked at a credit card call center with an old baseball coach. And so I learned a lot about, credit card and credit card debt and that kind of thing. How to transfer the money around, how to pay it off, and kind of like the great or horrible effects that compound interest can have when it comes to being on a credit card or in a savings account. And then from there, joined Finder about 6 years ago. And every day we just are either doing consumer research where we're looking into trends that people are doing, or if we notice certain prices moving in a certain way, how that affects people. So and then from there, health insurance is one that, as an American, it's pretty straightforward. Like if you have a job, you have health insurance, and if you don't, you generally it's very expensive and quite a big issue. And here, getting my head around, first of all, that I could just go into the hospital and that would be fine, and nobody would be chasing me for the rest of my money for the rest of my life, which was nice. But also all of the nuance of private health cover, why you need it, why you might not need it, what it allows you to do, and what Medicare covers and doesn't cover, because I think it's kind of like, oh, well, we've got this great healthcare system, and we do, but there's plenty of things that the government still treats as elective, like going to the dentist, that if you don't have extras cover, for example, you pay more than you would if you did, and just some other reasons that you might have private health cover beyond the real serious surgeries and that sort of thing.
Yeah, great. Yeah, and I like on the ground day to day talking to people about their money and rising cost of living. Private health is one that often comes up, and it absolutely is a bit of a black box, I find, and it can really be tricky. And a lot of people have it and need it, and I just find people are afraid of stuffing it up as well. So, do you like having any information on how many people actually have private health? And do you, in your sentiments, do people need it in Australia?
Yeah, so it's well over half of the population. So I think we're now at about like 12 or almost 13 million people that have some kind of private health cover, and that really ranges. So you've got four types now. They've tried to simplify it because there used to be a million different policy coverage areas that you could have for one thing or the other. So there's basic coverage, and then bronze, silver, gold. So the basic, and then you've got your Olympic podium. But some of the main reasons that people take out private health cover, especially if you're younger, is if you have a basic cover. If you make $97K as an individual or $194K as a couple, you're going to get a Medicare surcharge levy. So that will essentially, you'll be taxed more than if you had the policy. So a lot of people take out a basic policy just to prevent them from getting stung for not having it. Also, there's a thing called lifetime health cover loading, which is, once you're 31, July 1st, after your 31st birthday, for every year you don't have private health cover, if you do end up taking it out later in life, you'll be charged 2% for every year you don't. So if you waited until you're 36, then you're going to be paying 10% more for that same policy than you would have if you've had it all the way through. So you don't get charged it if you never take private health cover out, but there's a good chance that you're probably going to want it later on in life, as joints and eyes and all of the joys of getting older catch up with you. So that's the thing, and the government's done that specifically to get younger people buying in earlier to keep costs down for people that need it.
Yeah, great. And that's the two areas. So the Medicare levy surcharge, which differs from the levy, that's an income-based levy, if you will, or tax. And basically it's just an additional amount you have to pay if you don't take private health. And you'll often see it's cheaper to have. And you use the term basic cover. So can you just sort of help us define what you mean by basic cover?
Yes. So your basic cover is going to cover you for things like an ambulance call out, any kind of. It's essentially like in some ways like a hospital gown. Like you think you're covered, but you're not covered for all that much. But it does do the job, especially if you just are trying to avoid the surcharge, and there's a couple of more basic procedures that you want when it comes to, like, as you move up the range. So gold cover for younger people in general, this will be more for people who want to go to private for pregnancy. And the thing to know about that is you have to have cover for 12 months before you start. So it's not something where you can find out you're pregnant and then take out the policy, because it's 9 months and how that all works. So we'll walk you through that.
Math doesn't work. Yeah.
Yeah. But and that's another thing as far as costs go and service goes. I've talked to lots of people who've gone through public and lots of people who've gone through private. A couple of people who've done, one child public and one child private. And, the consensus is really mixed in terms of which was a better experience and which was but the consensus is also clear that if you go private, you're still going to have quite an out-of-pocket bill, even though you get to pick your obstetrician. There'll be some costs at the end that you might not incur if you go public. That said, with private, you get to have the same doctor every time. You're most likely getting a private room to yourself. It's available, and you're kind of, you're picking. You get a little more choice as to where you go and how long you stay. In the public system, you're still getting access to the best doctors and that sort of thing. So if in fact, there's been many times where a private birth had some complications, and then they were moved to a public hospital because obviously you want to have all those resources available to everyone, not just to the highest bidder.
Yeah. Okay. So it's just horses for courses by the sounds there.
Yeah.
And what are the key reasons someone would take private health out, and like what are the advantages, and can you just help demystify this hospital and extras conversation? So
Yes.
yeah.
Yeah, no, it's great call. So there's a few things, a few reasons why you'd take it out. First is the tax issue, which imagine if people are tuned into Apex advice, they're probably in the situation where they're trying to minimize tax and maximize their wealth. So that's for starters, an easy one. The second is to be able to skip the queue if you have an elective surgery. So let's say you twist a knee, or you sprain an ankle, or worse, you need to get a knee construction or something like that. You're going to be able to, if you go through Medicare, this will be treated. You will get an appointment at some point in the future, but it's not going to be next week in most cases, unless it's deemed, really, life critical. So, whereas with private health cover, you can pick your doctor, you can get in much sooner. So between having the tax benefit, being able to skip the queue, and then there's a huge benefit. You're talking about extras. So just to maybe to change gears to that. So an extras policy is what's going to cover you for things like glasses and contact lenses, your all of your dental work, whether it's checkups and cleans, or x-rays and fillings and root canals and everything else. You got physio in there, remedial massage in there, chiro, lots of different things, and that's all in an extras policy. Now, a lot of people think that you need to have these policies, like if you take out your basic hospital cover, that you also need to take out the extras with that same group, or that you'll get a better deal if you take it out with that group. And it's just really not true. A lot of times the best deal for extras might not have the best deal for hospital, and vice versa. So you can save yourself money by having them with in different places. So yes, it does mean having two accounts, if you will, or two different cards, but can be well worth it. And the second thing is the best deals often go to new customers. So when you switch your extras, you're often getting 6 weeks free, or they won't, and then when you switch, in almost all cases, if you've already sat out a waiting period, you don't have to reset the waiting period. So you can take advantage of the deal of a new customer without being forced to wait to use the service.
Yeah. Okay. So it's like the banking, we can pay a loyalty tax for being too lazy to review and switch, and wasn't aware about the reset of the waiting period as well. So it's worth jumping on and having a look at your extras year on year, which is great.
Yeah. I mean, it really is. The more we look at this, the more we go, just you kind of shake your head, because the best deals are for new customers, which means it's very hard to, it's hard for the insurer to show loyalty to you when they're trying to bring new people in. But you can take advantage of that by switching, or in some cases just mentioning the new offer that you're getting elsewhere. So I work at Finder, and we obviously would love for you to compare on Finder, but you can also use that as a bargaining chip. Whether it's your savings rate, or your home loan rate, or your energy rate, or your what you're paying for health insurance, or even the benefit that you might get if you switched health insurance, because it's cheaper for them to keep you than it is to pay for a new customer.
Yeah, well, that might be a good action item for people's break is to bitch and switch.
That's right. That's right.
Yeah, and like just to wrap a nice bow around this private and public conversation, it sounds like what you're saying is our public system's pretty good for the most part.
Oh, yeah.
But private is, it's a good way to just get a nicer bed, a nicer room, maybe some accelerated treatment or electives. Is that largely the key?
Yeah, I'd say that the other big call out for private is ambulance costs. So Queensland and Tasmania, they have Medicare pays for ambulance, but in every other state and territory, that's coming out of your pocket. So if you if you don't have private cover and you need an ambulance, it can be thousands of dollars. Depending on the length of the ride and all that. So, that's a good, protection to have in place. That way, if on Finder for extras, for example, just for dental, right? So you can get a pretty basic extras policy for about $13-14 a month, right?
Yep.
And that will cover you for 2 dental cleanings in most cases. I mean, it has for me for the last 4 years. And also you're getting, that's a no gap. So you go in, you get the cleaning, you come down and you show them your card and then you walk out, you don't pay.
Yeah.
But when you add that up, the dental cleaning itself, if you paid out of pocket, a lot of times is, almost $150, $120, $150. So you more than pay for your extras cover just by
taking advantage.
If you go to the dentist twice.
Yep.
If you go to the dentist once, you pay for it. If you go twice,
just for that component.
And that's before you're getting 50% back on, when you go to the physio or the chiro or something.
Yeah.
So extras for me, it's a no-brainer, but they're also kind of a use it or lose it. So if if you're not going to the dentist and not going to the physio and that sort of thing, then it doesn't make a ton of sense to have extras. But hopefully everybody's going to the dentist at least once a year, keeping the disease away there. And that's when it makes a lot of sense.
Helps you be a bit more preventative, And one tip I've heard people doing is getting that claims history from your insurer. You can see what you've claimed on over the last 2 years or so. And then like you said earlier, which is a good point, you can decouple the hospital and extras so you can get a quote without the extras and just seeing like what the premiums versus what you've claimed looks like and doing the math. Maybe you can self-insure or maybe you do need it on a higher level. So
we've got a little quiz. We've got a little quiz on Finder where you come on. It's just like a little where you first get on the page, what kind of cover are you after, and you can really see the difference between the different policies and the different plans. We've done some Finder awards and some scoring to try to make it clear which ones really meet consumer demand and which ones maybe are a little lacking and where. The other thing I'd say is if you're a couple, you don't have to have couples health insurance, and a lot of times it doesn't make sense to. So especially for the younger couples that might be watching this, the lady might like to have gold coverage for pregnancy and for that sort of thing, where the bloke might be very happy just to have basic coverage. So if you have that as a coupled policy, you might think that you're saving, but actually you're both paying for pregnancy cover when probably only one of you is going to need it. Depending on the relationship. That I'm speaking very generally.
Traditionally.
Yeah. But that's something.
Oh, that's a good point. So you don't even need to go sort of family. You can sort of decouple on an individual level as well based on your needs. That's awesome. And just another one, like a couple of more, like you've unpacked the surcharge and the lifetime health loadings and these sorts of things. Yeah. It's really good to get our head around these acronyms and terms. But what about this rebate and the safety net terminology. It's all stuff we've heard. Do you have much experience with those areas and understand those? Or?
When you say the safety net, what do you mean?
More so around like the calculation around the rebate, the rebates that each insurer provide and how they work out how much rebate, or that from the government level, I guess, how much rebate you get for your cover. How does that work?
That's very opaque. So essentially it's determined by your age and income, so it's going to mainly apply to people with taxable incomes of $151,001 or less, or families that are $302,000 and about or less. So the thresholds of they continue to go up, but it's normally just like a discount that you get at tax time. So you could get a rebate or not. So that's just when you see something at tax time and you go, wait a minute, I have basic cover. Why am I getting stung with this? Well, the answer is probably you're doing all right when it comes to income. Most people, I think, if you're under 65 and in the base income tier, your rebate will be around 25%.
Yeah. Okay.
It's another nice little benefit. And again, all of these things are designed to get as many people paying into the system as possible, just to take the load off the government where they can, and then to kind of reward back the people who maybe need it the most.
Yeah, great. Oh, it's a great summary, Taylor. Thanks so much. So just for our audience out there, what's some, best place to start around exploring this? You mentioned your quiz there earlier, but what tools have Finder developed or got for us to explore all of this further?
Yeah, no, I think that's really the best place to start. So, it's finder.com.au. You might have heard the jingle in the past, or we're bringing it back. It's catchy, even though people, it's one of those things you hate, but then you remember. /health insurance, or you can just go to the homepage, and that's there's a quiz for whatever type of coverage you're after. Whether it's single or if you want to see what couples policies are. I'm not telling everybody not to go on the couples policies. I'm just saying it makes sense to have a look. We've got 40 different funds on there, and you can really see what extra cover you might get, or which insurers are perhaps a bit more likely to pay out when there is one of those gray area situations that you're trying to make a claim for. So that's where I would start. And when it comes to extras, a lot of people look at it and go, "Ooh, remedial massage, that'll be nice to have covered." But keep in mind with a lot of the extras, you're getting half of it paid for versus all of it paid for. With the dental cleaning, if you go to a no gap dental place, you'll get it all paid for, so it's a really good deal. With some of the other treatments, you're getting half off, which again could very easily be worth it. For if you're talking about a policy that you're paying $20 a month for, and you go for a $150 physio, that's great value. So it's really about picking a policy that matches up with your needs and wants, and trying to keep it just to that, so you're not paying for things you're not going to use.
Yeah, awesome. And you guys have put bucket loads of research into the different policies and type levels and hospitals and extras.
I'll send you some links that you can add.
You can drop them in. Yeah.
So or whatever. But so we've broken down. We talked about the rebate very, very broadly, but we've got a page on that. We've got a page on explaining what's all of the different tiers cover you for. The whole thing on tax. and how to get your tax rebate if you're in that kind of gray area. So yeah, there's no shortage of explanations and guides and all that. So whether it's tax or even the deals for if you do want to switch, if you're kind of fed up, you've reached that point of I'm done with your current provider. And the other thing to know about this is on April 1st, every provider will be putting their rates up, and they've petitioned the government to raise them, up to 10%. So the government will push back, I imagine, and we'll see something kind of more in that 3 to 6% range. But it generally varies by provider. It's not just one.
Not blanket.
Rate. Yeah. So great. It's a good time to be looking at it and to be kind of educate yourself, because come April, you might want to leap to a different provider.
Yeah, you might get a bit of bill shock. Well, that's great, Taylor. I really appreciate you taking the time to help demystify and lift the fog on this topic. We'll get a couple of those links in to help people explore this as a starting point through your tools at Finder. But yeah, thanks so much for dialing in, and have a good Chrissy.
Thanks, you too.
Thanks, mate.
See you.